Afrika on Channel 405. I'm Dumisang Dlovu in Cape Town.
South African consumers are in for heavy economic times ahead. According to the latest report by DebtBusters, unsecured debt has increased by an unsustainably high 54% since 2016, while their debt to income ratio is now an alarming 150%. Benay Sager is the head of DebtBusters and joins me now to talk more about these latest developments. Benay, thank you very much for joining us. Over the past 6 years, we've seen a material decline in disposable income when it comes to consumers and a higher debt burden that is contributing to the financial challenges faced by many South Africans. What is different that this latest report is telling us?
Yeah, thanks for having me on the show. As you say, the news are a bit grim when it comes to the debt front. And we've certainly seen that with the increase in terms of what consumers are looking for. We've seen about 32% increase in terms of inquiries this year compared to the same period last year. But what we are seeing is essentially two things that are squeezing consumers. The first is inflation. We're seeing this more and more, starting with petrol and electricity, but also moving on to basic commodities and food and all of that. Inflation hits everyone, all income groups. It hits the poorest the hardest normally. The second thing we're seeing is also the increase in interest rates starting to impact consumers. And that's more on the middle to higher income earners as they have more loans. But the impact is the same across the board, as you said, rightfully so. Unfortunately, the income levels in terms of nominal terms haven't really gone up in the last 6 years. So when you factor in the inflation, consumers are probably feeling like they are 31% poorer with the impact of inflation. And they probably are, because that's kind of how much less money they have from a disposable income perspective, which is not a great story, unfortunately.
No, absolutely not, Benay. But what is also interesting is that those who are better off in terms of income, and according to your report, those who take home 20,000 rands per month are the ones who are seeking new debt. This is also manifested by the increased demand for debt counselling as well.
Yeah, so what we have seen is particularly over the last 2 years, there's been an acceleration in terms of the higher income earners, as you rightfully said, in terms of having to tap into more credit. And specifically, what we are seeing is that in the past, these income earners would support maybe their parents or a few other people. But now they're supporting, in addition to the parents, they're also supporting extended family members, what we can see. So not only they're supporting the parents and their own kids as they did before, but now they're also supporting uncles and aunts and cousins. So we've definitely seen, and this is a direct impact of the pandemic of the last 2 years, fewer people have well-paying jobs, and those who do have are feeling more stretched, and as a result, feeling like the only way that they can support the broader family is to borrow more. And I think that's what we are seeing in terms of the escalated unsecured debt levels for those income earners.
Your report also shows that this is actually good news, that more consumers who are in distress are seeking help much sooner than in previous years. But it also shows that men are the ones who are seeking more debt counselling than women.
Yeah, I mean, we know that financial stress, debt stress, is one of the leading causes of suicides as well in the country. And we, particularly for men, generally these are not things that are talked about. It's not something that's mentioned. It's seen as a taboo topic. And so we are pleased to see that more men are taking up the challenge of addressing this and saying, you know what, I can get professional help, and there are some people who can help you. As we said before, and we mentioned this on this show as well, South Africa has an excellent debt counselling system that's provided for by the National Credit Act. The people who wrote the act had the vision to think that there will be some tough times for consumers, and they provided for this as part of it, the National Credit Act within debt counselling. And we really encourage consumers, if they are feeling like they're stretched financially, to seek help, particularly from debt counsellors.
Something that consumers are thinking about right now is inflation that is ever rising. It's not only in South Africa, but also central banks around the world are increasing those interest rates, and we will see, I think, in about 2 weeks' time, the Reserve Bank Monetary Policy Committee coming out to actually increase the interest rates and the repo rate. This is something that is quite alarming. What exactly can consumers do right now? What should they be doing in order to be in a better financial footing?
Yeah, I think, as you say, it's good to be proactive. So when it comes to inflation, we know that it will go up this year. Already, the inflation this year compared to the same period past is much higher. And you rightfully said it's the same globally. The war with Russia and Ukraine doesn't help the situation. Petrol prices are up. So in terms of inflation, there's very little we can do. Perhaps consumers, if they have extra money, to stock up on some necessities that are durable goods, some of the dry goods that don't perish in short amount of time. That might help them in terms of necessities. When it comes to interest rates, if you do have expensive loans, such as unsecured loans, that you check your interest rate to find out how much you're paying. It's on your statement that you get every month. Check to see those credit card balances, see how much you are paying in terms of interest rates, and inform yourself. And once you're aware of the interest rates, do take advantage of something like debt counseling, because there's a great chance that depending on your situation, those interest rates can be reduced significantly if they are 18 to 20% in terms of range. So there is a good opportunity for consumers to inform themselves about what they are paying, what interest rates they're paying, and try to mitigate those from going up even further.
Benay, when you mention debt counseling, to many people, it's alarming. They don't want to hear the word debt counseling. What are the pros and cons to debt counseling? Obviously, the pros being your debt repayments will be lower, but there should be the negative side of debt counseling as well.
Yeah, I think it's important consumers understand what debt counseling is there for. It's there to not erase your debt, but reduce what you are paying on a monthly basis by giving you longer time to repay back your debt. So the concept of it is that if you are struggling to make your finances work on a monthly basis, but you can still pay back some of your debt and you have income, then it's a great solution because it gives you longer term to pay back your debt. And it reduces interest rates generally as a result of that by virtue of extending. And it allows you to kind of pause and reset the financial situation. Now, on the flip side, it's a long-term solution. We always tell this to consumers, you don't get out of debt in one day. It's probably somewhere between 2 to 5 years solution, depending on the level of debt you have and the amount that you can pay back from your monthly salary or from your income. It also means that while you're under debt counseling, you cannot take out any further credit, so new credit. So whatever your credit situation is, it gets, in a way, frozen in time. It allows you longer time to repay back. But in return, you need to demonstrate with your creditors. So we think overall it's a very positive solution for people who need it.
Benay Sager is the head of DebtBusters, talking to us about how consumers have gotten into debt traps and how they could actually get themselves out as more and more South Africans are getting into unsecured debt agreements under very difficult